So before we jump into the speakers that we have today, I know there's a great set of panelists. I want to set the stage a little bit and ask really, what is the role that fintechs are playing in the financial services ecosystem? And when I ask this question, I think the most common response that we hear is that they're disruptors, but I think it may be a little bit more nuanced than that. They can absolutely be disruptors, but they are offering innovative products that often can be replicated fairly quickly by some incumbents. So a more apt name might actually be influencers in some way. So at Corporate Insight, as Drew mentioned, we do a lot of benchmarking where we compare financial services firms on their mobile apps and their websites, ranking them based on functionality, capabilities, and site design. And when we do this and introduce fintechs into the space, we find that they often don't compare very well to some of the incumbents. And when they're really standing out, so to speak, it's usually in one or two key areas or because of a design that's unique and innovative. But more often than not, they really fall in the bottom half of our competitor assessment. So that really raises the question, if they're not performing overly well with their capabilities, how are they finding success? And there's a couple key areas that I'd point to. The first is that they offer really simple to use apps and websites. So these are apps that are built from the ground up to serve a really core central purpose. And they aren't bloated like a lot of other financial services apps or sites tend to be. They offer transparent pricing. Fintechs are often trying to bring financial services to the masses or hard to reach markets. So it's really important for them to offer uber competitive pricing here, often making transparency around that pricing a focal point. And they tend to lead into that with their branding as well. And that's the third thing I'd highlight, that they have some really sleek branding. They tend not to offer or have large advertising budgets. So they really rely on referrals or word of mouth and offering products that resonate and create strong, loyal customers that then become advocates for them. That leads into offering products with an impact. Fintechs generally tend to be targeting values-based customers. So they have products that they want to make an impact in their lives. And with this, they at times are geared toward hard to reach or niche markets as well. But in general, these products are meant to stand out in a really competitive landscape. And the last thing and the most important thing I think to talk about in regards to what we're going to cover today is that they have the freedom to innovate. They aren't beholden by a lot of these legacy sites. And they have longer leashes than a lot of firms do that are more established to actually try and experiment and come out with more innovative approaches. So I want to highlight a couple of the innovative approaches that we've seen from fintechs over the course of the past year. So when you look at the fintech ecosystem, it's pretty broad. Fintechs really are targeting pretty much every single consumer finance vertical we look at. But I'm going to focus on three today, those being banking, investing, and payments. These are the focus of our FinTech Monitor product that Corporate Insight offers, where we track fintechs on an ongoing basis to understand what they're doing. So in the banking space, one of the things that stands out is early access to paychecks. This is a valuable resource for the underbanked in particular. It allows clients to receive their paychecks up to 2 days in advance of when they get it with a more traditional firm. And this can be really important, especially when clients need to pay rent or other bills, and also is helpful to avoid late payments. So this is really a product that is designed to aid lower income households that may be looking for some short-term liquidity issues, but it's actually a boon for the firms themselves in that it's bringing in direct deposit directly into those accounts so they can become more engaged with their clients and have a greater opportunity to cross-sell. So looking at the ecosystem here, Chime was really at the forefront of this. They introduced early paycheck access in 2015 and made that a core backbone of their entire banking experience. And then other banking fintechs were pretty quick to jump on. You saw Moneyline and Varo jump quickly. And even more recently, we're seeing this in the investing space as well with firms like Wealthfront and more recently Robinhood introduced their own early paycheck access. So how are incumbents really responding to this? I'd call out USAA first in that they've actually had early paycheck access for years at this point, but they never really made it a focus of their branding, and it's only available 1 day early. But in response to this trend, we really aren't seeing banks do too much yet, some of the incumbents though. The two that we point out are Capital One and Fifth Third. They're the only two that we cover routinely that have introduced early paycheck access and are giving these products to a significant target base that they might not otherwise be able to service. So in an investing space, what I'd call out is the rise of social and community investing here, which is empowering retail investors. The three firms that I think are worth highlighting are eToro, SoFi, and Webull. eToro offers a copy trader feature that allows users to mimic the trades of others. This is only available in the UK, but it should be available in the US within 2021. So we're looking forward to that. SoFi is another firm that makes the community really important to the mobile app experience. They allow their clients to follow the portfolios or watch list or actual investment activity of other SoFi users if they allow them to do so. And then there's Webull, who really embraces the community aspect. They have paper trading competitions and a really gamified experience. So these firms are trying to provide a platform that's engaging in a new way and resonates with their users. Looking at how financial service firms, the incumbents in particular, are resonating with this trend, what we see is that, if we're being honest, it's been tried before. TD Ameritrade, Schwab had communities back in the day, but they ended up shuttering these because they had really low engagement and they weren't really resonating with their clients. But a unique approach that we're seeing that's really interesting is one that Fidelity just launched. So they're going to where their clients are. They just launched a subreddit in which a Fidelity employee is actually a moderator there. So instead of trying to create a platform and getting people to come to them, they're going to where the engagement is already happening and they're expanding their brand in that way. So it's a really interesting approach that we're seeing. In the last area I'd call out would be the buy now, pay later space. I'm sure everyone's heard of a lot of movement going on in this space, but really Klarna, Affirm, and Afterpay were at the forefront of this. And they introduced buy now, pay later as a cheaper alternative to traditional loans or credit cards, allowing people to make larger purchases on fixed rates that are often way lower, significantly lower than their credit card APR. In terms of how firms have been responding to this, Amex was at the forefront in 2017, followed by Chase and Citi. They take a slightly different spin on it where you make the purchase with your card, and then after the fact, you can then convert it into a payment plan that has a much lower rate as opposed to not paying off your APR each month. So it's an interesting approach, but we've seen this become a very saturated space with firms like Amazon, PayPal, Square, Apple, pretty much everyone becoming involved. And that makes a lot of sense because this is a product that really resonates with clients, especially younger people. Millennials were twice as likely to use this product since 2019, and Gen Z is actually 6 times as likely to use this. So it's something that's really resonating, and that's why we're seeing a quick response to it. So I jump back to that original question that I asked is, should we view them as disruptors or influencers? And I think the cheeky answer is yes to both, honestly. It really depends on where you're looking at it and where you're coming from. They're disruptive if you work for a firm that is slow to adapt to changing circumstances, changing preferences of your clients. But they can also be really beneficial to those forward-thinking firms that are actually able to let this ecosystem kind of evolve and be a sandbox where new and innovative things are being tried out, and then take those approaches and replicate them in-house, offer the same things to their clients. So the answer is both. So just think about that as we go through the rest of the speakers today. Really, what is the role of fintechs and how are they influencing the broader financial services ecosystem? Great. Well, thank you.
Thank you so much, Matt. A great table setting for the rest of the afternoon.